The big one out with results today was Bidvest, and headline earnings per share up 15% for the company for the full year. We saw the trading margin increasing from 4.6% to 5.1%. What are your thoughts on the stock?
Evening, Bronwyn. I actually remember it was a year ago we were talking Bidvest numbers and I wasn't convinced for a couple of reasons. I got to say, I think these numbers were great. Really tough times. They got hit by the currency. They really managed to solve that, to work through it. They worked through it by really cost cutting and the like. And just those numbers you quoted quickly before you cut through to me, I think the numbers on the surface really good.
Well, let's hear from Brian Joffe, South African, as I said, industrial conglomerate Bidvest posted that 15% rise in full-year headline earnings per share, and that's a stronger demand for cars and food services offset unfavourable swings in the currencies, which Simon has just referred to. I spoke to CEO Brian Joffe about the World Cup effect and possible acquisition plans going forward.
The impact on Bidvest's overall result for the whole year is probably somewhere in the order of a quarter of a percent in headline earnings growth. Second half, it'll obviously be a bit bigger, just over half a percentage point. But you know, when I say it's bad, I think the issue is that if you're translating that into financial results in the very short period of the 1 month, I think that the impact of the World Cup over the medium term will be significantly better for us financially than it was in the 1 month. I think what we misread, and I think probably many others did, was the behavior of the domestic population in relation to the World Cup. So a lot of activity happened in Gauteng, very little in the coastal zones. Natal's hotel occupancies in June were lower this year than they were in the previous year, despite the World Cup. And also a lot of fans, flew in for the game, flew out back home. There were a lot of charters from Argentina. They came for the game, they went home. So they didn't stay in hotels, they didn't eat, there was no real impact. Whilst we counted them as foreign visitors, the impact financially was very little. And then of course the domestics never traveled. We got sucked into the World Cup, it was fantastic. But the impact, of course, economically was very little, certainly for us anyway.
When you say the benefit will be seen over the medium term, can you take me further on that thought process?
Well, I think from a South Africa standpoint, I think the South African image was hugely enhanced over the world for the World Cup. And I think that we will see more foreign tourists, given the rand. We'll see more foreign tourists here. We'll see a lot of benefit coming out of it over the medium term. And I think it was, I'm sure you'll agree, it was a fantastic month. Even
through the tough economic period, you have still been making acquisitions, and let's bring to the fore Nowaco and the Eastern European businesses. Can you, they were included in the results from the 1st of July 2009. Are you going to continue on the acquisition strategy?
Yeah, and look, Nowaco had its pluses and minuses. I mean, whilst it contributed on the one hand to our operating profit, all of the benefit was negated in the costs. I mean, the cost of doing that acquisition was 60-odd million rand, and of course under new IFRS rules, we wrote that off as a cost against headline earnings. So that was, a one-timer. Whilst we say we do these things in bad times, if you take the cost of doing the acquisition today versus what we would have done it a year ago, in appreciation terms, the rand's appreciated against the euro by 20%. So whilst it may have been good then, it may not be as great now. I'm talking about in acquisition cost terms. So one can't forecast all these events all the time. So you have to concentrate on some of the basic things, make sure that the fundamentals of the deal that you're doing work for you. And Nowaco is going to be great. And, Faratex, which was part of the same deal, Poland, I rate Poland for an upgrade. I think Poland has got such a lot of opportunity. So it will be great for us.
Trading margin from 4.6% in the prior period to 5.1%. Are we looking at a stable margin at these levels, or can you push that line further?
Well, as I said, from our point of view, we were looking to a quality performance, and that, of course, had the impact of improving our margins. So we, consciously, did less sales in certain areas, and of course, this has improved. And yeah, I think it's sustainable, and I think there is some room even for further improvement.
Closing at 131 rand, up 1 3/4% in line with the broader JSE all share today. From a valuation perspective, where does this one lie in your book?
I think it's probably fairly valued. The issue with a company like Bidvest, it is such a humongous company. Brian Joffe was talking there about acquisitions. They've got to buy practically half a country for the acquisition to have any real bottom line impact and really boost it. You really are buying a very, very defensive stock with different areas, a stock that's never going to run away with it, but a stock that's going to really just plod along. And the numbers from this year for a company of that size is really good growth. That's probably the upside of what you're going to see, but you're never going to see massive downside either.
South African diversified miner African Rainbow Minerals has reported a 26% drop in full-year headline earnings per share. That's hit by the strong rand and lower prices for iron ore and manganese. Now, earlier, Stephen Gunyon spoke to CEO Andre Wilkins and asked him if the turnaround seen in the second half continues into the new financial year.
It has certainly continued into the new financial year, but if one just consider our halves, the last half comparing to the previous one, 178% up. Comparing to the half before that was 1,300% up. So I think the turn has worked for us. And the one metal where we suffered probably most was actually manganese pricing, coupled to the rand. And the last half that has just continued, we saw those prices were up 78% again.
I'm looking at your costs, and you did point out in the commentary that you have been controlling them, they have been coming down. What's they looking like going forward, though, particularly with the wage increases we're seeing across the mining sector at the moment, with those electricity tariffs coming through from Eskom? What sort of pressure does that put on costs going forward?
One area that makes us very fortunate if we talk costs is we continue with our aggressive growth. Our iron ore is going to go from 10 million tonnes to 16 million tonnes over the next 2 years. The coal project that we did with Xstrata, that's building up and will show significant increase in volumes in the next year. We're building the large-scale nickel mine, which is sitting around about 9,000 tonnes of nickel per annum. That's going to 20,000. So I think volume growth will help us with labour cost pressures and that sort of thing. As far as the power costs go, only two of our, we have two smelters, a ferrochrome and a ferromanganese smelter, and they feel the pressure of the cost increase significantly. We have changed some of those operations. We're trying to do away with the older ovens that are more expensive. But that's probably where the cost of power will hit us most. On our mining operations, most of it is open cast, most of it is diesel operated. So we actually have very little effect of the power increases on all the mining operations.
Andre, I'm just looking forward, and of course we do have all concerns about double dips in the United States, slightly slowing growth in China. I mean, how do you see the picture for commodities and resource companies such as yourself going forward? Do you think we're going to hit that double dip? Is this something that keeps you awake at night?
We certainly, a fair amount of our metals going to China, some going to Japan, some going to India, and we're quite close to those buyers. We think the metals that goes there, like iron ore and manganese, is still very well positioned. Manganese, they may be high on the stockpile at the moment a little bit, but the pricing is still looking very strong. Iron ore, certainly, we're a very small producer, but we've got outstanding quality of iron ore. The same with manganese. And we found through the dips that the quality products always had a role to play, especially when people look at the cost of their furnaces, putting in high quality material helps. And I think that will stand us in good stead, even if there's a bit of a downturn.
Simon, African Rainbow Minerals closing at 151 Rand, up 2%, just outperforming the JSE All Share today. What do you make of the stock?
I thought the numbers weren't brilliant. The market pushed them up ahead of the market, marginally so, but a bit ahead of the market nonetheless. And my question with African Minerals is, if you're looking to buy it, the question is why? If you want diversified miner, then surely Billiton. Potash story not aside, but Billiton is your better. If you're particularly interested in the assets, iron ore, platinum and coal, then my question is, well, what about Anglo Plat, Kumba Iron Ore and Exara as the individuals? I suppose you buy it because you consider Billiton to be a little bit too boring and you want a little bit more excitement in the share price. But to me, it's always fallen between two stools, not diversified enough and not specialized enough.
Just looking at the results out this week, we've got Basil Reed tomorrow, Pan-African Resources on Tuesday, Cipla MedPro, Metropolitan and Sanlam. And then we've also got, or Santam rather, Discovery out on Thursday. Any of those results we should be paying particular attention to?
We've had some updates from all of them. We want to look at the Basil Reed, in particular construction. They've told us it's going to be tough. How much is it the deal that they did with TWP and the like? Discovery, I remember 6 months ago in studio with you with Adrian Gore when he came out with plus 50%, and the question was, can you repeat it? He said no, they didn't, but they're coming pretty close, all things considered. So those are the two that really I'm going to be focusing on for this week.
And then the continued volatility that we're seeing on the market. Just a moment ago, speaking to Justin Froneman, platinum analyst at Macquarie First South, looking at those platinum stocks, one day at the top of the top 40, another day at the bottom of the top 40. Is that volatility being mirrored throughout the JSE?
It is to a fair degree, and I mean, if we step back at a slightly wider picture, our market this year at the All Share Index has been trading between sort of 26,000 and some change and 29,000 and some change, and within that we're seeing relatively aggressive moves. The platinum guys perhaps to the extreme to a degree, but certainly Anglo America, BHP Billiton not immune from it. Really the companies that are perhaps more immune to the volatility have been our industrials, to a lesser degree the financials, but the resource stocks, Kumba Iron Ore today up 4%, last week taking an absolute pounding. We're certainly seeing volatility, and that's based on, are we double dipping or are we not? And depending which we are, depends on whether you're buying or selling.
Recently, a survey out saying that 60% of South African fund managers are looking to the market going higher from these levels. 40% of them see us touching 30,000 on the JSE All Share by the end of the year. Are you in that camp, Simon?
I think we're going higher. As I said, we're trading in that 26 to 29 odd thousand range. I think we're going to get back to the 29,000 range, and frankly we're going to turn down and we're going to come back to the 26. I think for 2010 as a year, I think we're probably going to see our market flat. So in the short term upside, but I don't think it's the beginning of a new strong rally. I don't see it taking us through 30,000.